Hello. So good morning. Pleasure to be here. As anticipated, I'm Giorgio Tinacci. I'm the founder and CEO of Casavo. Casavo is a leading next-generation residential marketplace. We are headquartered in Italy, Milan, with activities also in international markets such as Spain and France. So I'm going to go through the presentation, and then if you have questions or want to get a coffee later, very happy to do so. So first of all, when I founded the business at the end of 2017, I did that with a clear mission that has been the same since the start. The company has changed a lot, but let's say our North Star has been always the same, which is to change the way people sell and buy homes across Europe, providing a superior experience to all of them. So starting from the market, I think all of you know real estate, and maybe you have bought a home or sold a home, but essentially we are talking about probably the largest consumer asset class. Consider that just in Europe, on average, every year there are 1.2 trillion of homes being sold in the residential segment. At the same time, it's an industry and it's a market that has never been really digitized. So what happened over the last 20 years, the only meaningful innovation was the one brought by real estate classifieds that essentially brought online the home catalog. So people nowadays, in 80% of the cases, start their home search online. However, the whole transactional experience has stayed the same since the very beginning. It's a very costly, very complex experience that in the end ends up with a very low customer satisfaction for either home sellers or home buyers. So when, let's say, embarking in this entrepreneurial journey, we are talking about building a marketplace, so we had to decide whether to start from the egg or the chicken, so from supply or demand. And if you look at how European markets work, everything is very supply-driven, meaning that the transaction is originated by a seller that decides essentially to assign a mandate to a broker, and then buyers and essentially demand will follow on the back of that. This is an important thing because it's very different from other markets such as the US, where you have two brokers. Now that is changing as well, but you have a sell-side broker and a buyer-side broker. So the opportunity in Europe is that by, let's say, controlling the home selling experience at the very start, then you can control the whole transactional economics and user experience. So we started with solving the problem of home selling, and home selling is a nightmare in Europe. It takes forever. It takes on average, even in very liquid markets such as Milan, for example, close to 200 days to close a transaction at the notary. It's a very complex process that requires essentially interacting with a lot of counterparties, and you have to dedicate a lot of effort to it. And it's a very costly experience because in terms of transaction costs, by considering brokerage fees and ancillary costs, it can cost up to 6 to 9%, depending on the market and the type of transaction. So we made it simpler with Casavo and stress-free in essentially by acting as a liquidity provider for those home sellers. So we started by offering to buy directly the home with our balance sheet, so offering immediate liquidity to those customers, and then over time expanding the offer so that we provide the right price. We can let you choose whether to sell directly to Casavo at a discount or to a final third-party buyer, and ultimately close the whole transactional experience with a few clicks and in an integrated fashion. So over time, we have evolved and changed a lot. In a very humble way, we decided to build this new concept of marketplace following the experience of other e-commerces or marketplaces such as Amazon, meaning that we started as a asset-backed model, so by offering directly to buy the homes on the balance sheet and effectively being the liquidity layer with our own funds directly. This allowed us, until I would say COVID times, to really disrupt the market. We started with a few neighborhoods in Milan and then expanded in other areas and then in other cities in Italy and then eventually abroad too. At the end of COVID, thanks to this disruptful experience, we started to receive thousands of sellers requests every month. We estimate that in a market such as Milan, roughly 60 to 70% of prospect home sellers, the first thing they do is they go on Casavo.com to check their home valuation and then eventually being enabled in their process through Casavo platform. So in 2021, we had to decide what to do out of all those customers. So we couldn't, let's say, buy all those homes on the balance sheet. So the decision then was to start expanding our offer and providing to our home sellers the possibility either to sell directly to Casavo or eventually get connected to another third-party buyer. So over the last 3 years, we've been working with this hybrid model, so either buying on the books and then selling directly, or acting effectively as a digital broker in the transaction, connecting home sellers with third-party home buyers. And then up to today, clearly the cost of capital has changed a lot, so we have been mainly focused on working and investing on our asset-light model up to a point in which today the business is essentially 100% asset-light. In a nutshell, that's, let's say, a three-sided marketplace where we have supply on one end, so home sellers, and demand on the other, so home buyers. We connect the two of them and we manage the whole transaction end-to-end in every step, providing also integrated services such as home financing for buyers or supporting the renovation of the home. It's an inclusive platform where brokers in the market can work and access to business, meaning that they manage and we dispatch all these transactions to third-party partner brokers that effectively connect and facilitate, let's say, the whole transactional closing. In the last 6 years, as I was saying, started from Milan in a few neighborhoods, then expanded in other cities, in Italy, in Spain, in France through M&A. We are active in three countries, 10 cities. It's a very metropolitan market where we prefer to have a high level of penetration and market share in certain areas and enabling those liquidity dynamics before expanding into new ones. We have roughly managed 7,000 home transactions for an estimated transacted value of 2.5 billion. Last year only, we have sold on our platform 450 million of homes. We have reached very high level of market share peaks, especially in the first markets in Italy, close to 3% in certain areas. And we have really gathered a lot of data. So consider that we have, as of today, evaluated online on our platform close to 700,000 homes, and this allowed us over time to build data network effects to be more accurate in evaluating the price of the home, so both for our underwriting but also to provide value to our customers. We are a post-Series D company. We have raised in total in equity 180 million, and I will tell you more about, let's say, our latest funding in a minute. If we focus just on the asset-light business component, so 2024 is the first year in which we are essentially only asset-light. We have been growing triple-digit over the last years, and we expect to continue, let's say, delivering very high growth in the next years. So as of this quarter, we are running at, on the asset-light side of the business, at 200 million of sale GMV. And we expect to close to triple our growth by Q2 next year. So it's a business in which you build backlog and pipeline for 6 months, 9 months ahead of business. And so by projecting the trajectory of our acquisition and supply origination, that's what we expect to deliver in 2025. And then we target to reach in 2026 roughly close to 1.5 billion in sale GMV, which would translate in net revenues in the order of 60 million and an EBITDA of 15 million on a positive side. So that's on growth and volumes. Unit economics, that's on our first market as an example. Our revenues are essentially what we call marketplace fees, which technically are brokerage fees because that's how we are essentially allowed to collect fees from customers. On a transaction basis, the average ticket is roughly 300K. Our net revenue per transaction is 14,000 euro. Out of that, we have a gross profit or contribution profit with a margin which is 75%. The only COGS that we really have in the business, which is highly scalable, are connected to the broker commission. So there are, as I was saying, brokers that we partner with. We dispatch those transactions to them, and we give a share of the commission to them. And then we have other costs such as pictures or the media package. On average, we are running at a blended customer acquisition cost in our first markets of 3K. So this implies that the business is generating a very high return on CAC. So it's 3x on a gross profit, on a single gross profit basis. We have been burning money over the last years. We are expecting to reach break-even on an EBITDA basis in Q4 this year. For us, EBITDA, given the asset-light nature of the business, is a proxy of operating cash flow effectively. And next year is going to be the first year in which, on a full-year basis, we expect to deliver positive EBITDA. We managed to get here for 3 reasons. So first, clearly the asset mix shift was a very important aspect given the, let's say, opportunity cost of capital nowadays. We managed, thanks to our capability over the years that we have built of generating supply with home sellers, to get to a very low CAC. And we restructured, or let's say we revised completely the operating setup so that it's highly scalable, centralized, remote, with let's say a very low degree of labor intensity. We think we are best positioned in Europe to win the market versus classified players. Those are very far away from the transaction, and they have, let's say, a structural obstacle to enter into the transaction. So they are acting mainly as media platform, and their customers are brokers who advertise the homes on their websites. Versus other players in the market, although there is not a lot of competition nowadays. I think there are 3 pieces. First, because of our journey by transacting on the balance sheet, we were able to have a very strong hook towards sellers. And on the back of that, we could catalyze a lot of demand and aggregate demand on the back of that. The second piece is that because we've been underwriting homes on the book for such a long time, we have managed to build the most accurate evaluation algorithm for homes in our markets, which allows us to generate a lot of value in terms of data and valuation accuracy for our customers. And the third piece, we have been developing and working on the technology part to essentially digitize the whole transactional value chain. Selling and buying a home is a very complex transaction. So in Europe, nobody so far managed to build an end-to-end technology stack so that we could operate on a digital basis the whole steps of the transaction until the closing at the notary. The ambition here is big. It's let's say it's a long-term play. It takes time to disrupt, let's say, a residential market and ecosystem and customer dynamics. So we plan to be at a 1% market share on a national basis with 1.5 billion in yearly GMV by 2026. And then long term, we expect to reach 10% market share in our 3 target markets, which are again Italy, France, and Spain, which would imply 50 billion of yearly GMV, or call it in revenue roughly 2 billion, and that would translate with 500 million in EBITDA every year. We've been supported by a lot of investors, VCs from Italy, from Germany, France, US, for example, 360 in Italy, Project A in Germany, Greenox from the US, strategic partners as well, UniCredit and Intesa, which are the largest 2 Italian banks, are also directly or indirectly equity shareholders. Our largest investor is Exor, the holding of the Agnelli family, and we also have some other institutional investors such as Goldman Sachs. On the funding side, just to close the loop, we raised our Series D for 80 million euro in July 2022. That was led by Exor. In March this year, not yet disclosed, we raised a strategic extension of 20 million, which was led by UniCredit. That was combined with a 3-year joint venture with the bank, so to offer our experience to their 7 million plus customer base in Italy. Today, the plan is fully funded as we are reaching break-even in a few quarters, essentially. We've got some reverse inquiries for a second closing or for non-dilutive capital options, such as venture debt, that would be used in terms of proceeds to accelerate the plan on a greenfield basis or on a brownfield basis with some M&As that we have been looking at. So if you're interested in, let's say, either the second closing on the follow-on on the equity side or venture debt, which is something we are exploring for the first time, very happy to get connected. I would say that's all. That was the last slide. So thank you. Very happy to get connected. My email is giorgio@casavo.com, or you can connect with me on LinkedIn. Thank you very much.